Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is October the 2nd, 2012. We'll be looking at the S&P 500 Large Cap Index today, and I'm going to be attempting to basically alleviate the concern out there from bears that there's been quite a lot of talk that actually what we're seeing here isn't a great buy opportunity, is in fact a selling opportunity, a market peak. So let's discuss that. And whenever somebody has a different opinion than you do, it's good to actually go and look at what they're saying and see if maybe there's something you've overlooked or something of that nature, okay? And so that's what I do. That's whenever I'm bored and sitting around doing nothing, I go and see what other people think about the market. And when everybody gets bearish and I'm not, that obviously causes me to stop and take notice and say, hey, is there something I'm missing? So I go look. Well, this is what we're going to do today. I'm going to show you what I'm looking at. Basically, looking at the S&P 500, we can clearly see that the direction of the trend is up. That's very important. You always want to be trading in the direction of the trend. The only time you want to change that is when you think that you've seen a peak. Well, if you can do that, you can call a peak, and it can be done. It's just very difficult. If you think you're seeing a peak, then you need to go in and go short, of course, or at least prepare to cover any long positions, and watch that market for confirmation. Confirmation would be pretty simple. You'd want to see the overall trend break down. Now, there's different ways that people can look at charts, and just because I look at a particular way doesn't mean that's the only way to look at them. Technical analysis is actually one part art and two parts science, so it's important to note that there can be variations of the actual read. What we're looking at here, when I look at it, is I see a pullback that we've come to, and you could even see another pullback. I can actually pull back a little bit further, stopping out my current position and pull myself back down to the 50-day moving average, which would just be a great buying opportunity in my opinion. But in all these cases, I would just be looking at that point being higher than this previous low. So I'd still be in an uptrend and have no reason to be concerned, bearish in any way, shape, or form. However, there are others who would view it differently. Let me show you what they would see. They would look at this chart and say, all right, what we actually see is this little uptrend that we did in fact have, and then we came over here, we made this move, failed here, and now we're going lower and we're changing the trend from an uptrend to a downtrend. That is another way of reading the chart. However, I would consider this little move here minor and this to be major. Major trend is more important than the minor trend. So, for example, somebody else could argue, no, what we actually did was this move here, fail here, come down here, fail here, come down here, we're in a downtrend, blah, 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 blah. Okay, that's one way of reading it. However, your downtrend is still within a major uptrend, and therefore you'd be looking for this thing to be ending, not to be start of some major peak. At least that's how I would read it. So there's different ways to read a chart, and my way is better, in my opinion. Now let's go look at the long-term picture, because this is what a lot of people are talking about this. The long-term chart shows a much more bearish overview. So let's go look at that. Okay, we're now looking at a 4-year chart. Each one of these candlesticks represents a single month of trading activity on the S&P 500. The S&P 500 covers a majority of the market, so basically what the S&P 500 is doing, the majority of the market is going to do as well. So it's important that we analyze this particular average here. Whenever you're looking at this and the bears are talking about they're seeing a major divergence formation, you're talking about is there the ultimate oscillator. You can see the high point here and the lower high here, and then the even lower high here. It's actually trending down. The corresponding time period on the actual chart shows a close here, a higher close here, and a higher close here. So you're actually trending up. They're calling this a bearish divergence, which is true. That's how you would read that. However, a bearish divergence does not mean you actually say, I see when I'm going to go and short it, because that would be a bad idea. You want to time it. The actual timing would be a big difference here. And there are many other elements here that are missing from a short's perspective, which is why I wouldn't even begin to touch this with a 10-foot pole even if I were bearish. And actually on the economy I am, but on the actual trend that we're actually trading, I'm still bullish. First and foremost, you have the Fed that's backing it. So in short, you need some kind of major news to bring this thing to fall apart. Otherwise, the Fed's just going to keep driving it higher. So that's an important thing. You always want to trade with the Fed, not against it. And I can think of two major cases in the past 10 years of my trading that I have had massive losses, and they've both been times that I found myself on the opposite side of the Fed. I just don't do that anymore. It's just a bad idea. Timing a short is different than actually spotting one. Okay, so you may see an opportunity here and say, okay, I think that we're going to end up spiking, and then we're going to get short. That's fine. But when you want to get short is when you've overextended from support. And that's the key piece that's missing in the bearish argument here. Let's look at this for a second. Let me clean that up. Now again, this is every one of these candlesticks represents a single month, and this month just started. We're in day 2, so this is not going to tell us anything right here. But what we have right now is 1, 2, 3, 4 consecutive months to the upside. That is totally normal, not above average in any way, shape, or form. Over here, 1, 2, 3, 4. Over here, 1, 2, 3. Here 3, here 1, 2, 3, 4, 5, 6, 7. I mean, it's not a big deal to have 4 consecutive months to the upside. What is a big deal is the fact that you have previous resistance here. You found this previous resistance node here, and then you broke through it. Actually, that's kind of sloped. There we go. So we broke through it. So that is now, resistance is now acting as support. So that's why you see us bounce off of it here. Now you also have this previous resistance line, which is now acting as support. And you have this previous resistance line, which is now going to be acting as support. So with this support, this support, this support, all in the same area, you are nowhere, there's no way to look at this and say, we're overextended from support. You are nowhere near overextended from support, and therefore I wouldn't even begin to try to short this. When you're moving sideways in this market that you're seeing in the short term, like the past weeks, something like that, this makes perfect sense looking at this chart saying, why are we moving sideways? Because we have tons of support here. That's why we can't see a lot of downside potential. You're not going to see a major move like this. Crash. It's just not going to happen. I mean, barring some black swan event, it's just not going to happen. So when you're looking at this chart saying, I see a bearish divergence, that's fine. But if you've actually done your homework, you know that a bearish divergence is an early warning sign telling you, okay, this can develop into a short opportunity, or it can justify itself. You do not get short until the market starts to break down and confirm what you're seeing. And right now, you're not going to see that. What you're going to probably see is more move to the upside here. This will get further extended, and then you'll get up here, and it'll completely adjust and show that, oh, in fact, it's not a bearish divergence. Or you could start to press higher, the bearish divergence gets worse, and then eventually you'll start to see a sell-off, and that would actually make sense. You'd be further extended from support, and then you would actually go short there, not here. So that's my basic argument against the bearish scenario here, is you're just not timing it right. So what would I do as a trader rather than going short? I'd be going long, at least looking for individual companies within the overall average to take advantage of. I can name 5. Yesterday we told you about Apple. I still like Apple. You could talk about Dow Chemical. We talk about Caterpillar. We could talk about let's see, Apache. These are all companies that, even Wells Fargo, these are companies that have nice chart formations, pull back to the 50-day moving average or below, are in an uptrend. All these things are signs that I'd be looking for good buy opportunities. And again, if you are serious about trading, the first thing you want to do is trade with the trend. If you keep trying to call the opposite direction, you're going to be wrong more times than you are right. On October the 1st, 2012, I mentioned Apple, basically their stock, in our nightly market analysis video. I didn't show you the chart. I just mentioned the chart and told you that this is what I would be looking at, the fact that it's pulling back down to the 50-day moving average, and that would be a buy opportunity. As you can see, the following day, that's exactly what formed there. She touched the 50-day moving average and bounced off of that, forming a hammer candlestick formation, which if you've actually been to our website, you know how important that is to us. And there's many different things that you can do looking at this chart and analyzing it, and could have told you to actually be looking for a buy opportunity here. And for some of you, you guys already know that. For many of you, you may not. You can go to our free website at perfectstockalert.com, and you can actually learn everything that I know about technical analysis for free on the website. It's all broken down into video format, into small bite-sized pieces to teach you everything that you need to know. Tell you that when you're in an uptrend, you look for pullbacks to the 50-day moving average as a good point of entry, a good support area. You're going to see that again and again. Also, you could have known, just looking at the ultimate oscillator, low point here, corresponding low point, low close here, and the low point here, actually corresponding low close here. You can see this is trending up and this is trending down. This would be a bullish divergence, basically a scenario where the price is actually overselling and it's unsustainable sell-off here. You'll be looking for a buy opportunity there as well. This and many other key important elements of technical analysis is taught at perfectstockalert.com. Let me show it to you right quick. First and foremost, the perfectstockalert.com is 100% free, and you can simply go over here and anything that you want to know you can search for here, or you can simply go over here to the technical. You drop down, you got trade school here, chart patterns that you want to learn, those are right there, indicators and overlays that you might be using. They'll teach you how to use them here. candlestick patterns, individual candlesticks you want to know about, they're right here, and then we have even more here. If you actually take the time to go through and watch all these videos, it will take you a few hours, but if you actually took the time to do that, you would know everything that I know about technical analysis, and you would be able to pick the same stocks that I pick and actually trade with the same degree of success that I have. So this is a very important feature for you. It's free, and all we ask in return, please refer a friend. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.